All right, guys and gals, time to get back to work tonight. It is that time of day again here after all. Thursday evening, November 19th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Friday, not just any Friday, Options Expiration, OPEX Friday trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the E-mini, we got the oil, and of course we got that yellow metal, the gold futures on our radar for tomorrow. Speaking of tomorrow, options expire third Friday of the month. That is tomorrow's trading session. So we're expecting an increase in volatility, and as we'll quickly see here on these charts here tonight, got a bunch of ranges, got a bunch of interesting setups I'm tracking for tomorrow. I'm going to break this down into all the bite-sized pieces for you guys in this video tonight. Before we jump in though, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. We publish this nightly newsletter every evening, Monday through Thursday, with the best trade ideas, best setups for the following day. Make sure you subscribe so you don't miss all the important videos we publish here every week on this channel. And don't forget, if you have any questions, drop those questions in the comment section below for me. I'll get those answered as soon as possible. And as always, if you guys tune in every evening, if you're like me and you rely on this video newsletter to get that mind right and get those charts right for tomorrow, always appreciate you guys hitting that thumbs up button for me on this nightly newsletter. So again, make sure you subscribe, drop those questions in the comment section below, and thumbs up if you guys enjoyed the video as much as I enjoy making it for you guys every evening, Monday through Thursday. But enough of the introduction. Time is ticking. I'm a bit late here on the video tonight. Let's make up for it. Let's go right into the charts here and take a look at what we're looking for here in tomorrow's trading session. Now we got the gold, we got the crude oil, and of course we got the S&P. Do you see anything similar on these charts, right? I mean, they almost look all identical, don't they? They all have ranges, right? So lots of ranges, and of course overall bear trends, right? Got a bunch of ranges, and you'll notice a bunch of trend lines, right? A bunch of trend lines coming up. Now these little trend lines, these can really be a pain in the butt if you're not prepared for them, but if you know how to use them properly, they can really become our best friend for tomorrow's trading session. So anytime we see a range, want to buy low, sell high, focus on failures, but whenever I've got bullish momentum, right? The E-mini finished higher today, right? Oil finishing higher, gold, right? Finishing higher, lots of momentum turning higher here. No. We're not a bull market just yet. We're looking to get short here on pretty much all three of these markets, but the momentum combined with these trend lines are throwing us some curveballs. Well, maybe curveballs, maybe some nice, easy, slow pitch fastballs for us as long as we're ready for tomorrow. So we've got a pretty good plan. We're going to break this down into bite-sized pieces. Before we jump in, though, and get the charts going here tonight, I just want to make sure we double check for the news for tomorrow. Now, don't forget, tomorrow is the end of the week, right? November the 20th, and don't forget, right, this could be the last Friday of the month because, of course, next Friday, where we get that Thursday, Friday, Thanksgiving holiday. We'll talk about Thanksgiving. I can't even think about it. I can already smell the stuffing already. The turkey is stuffing already, but I'll get to that next week. We'll worry about how to trade Turkey Day, right, L-tryptophan Day, right? We'll worry about that for next week's newsletter. But tomorrow, though, might be the last Friday of the month here for us, which really puts a premium, right, on trading tomorrow. So options expire tomorrow, third Friday of the month, right? Third Friday of the month. Options expire at the closing bell tomorrow. They actually expire on Saturday morning, but all trading finishes on Friday afternoon. So we got OPEX tomorrow. That should mean increased volatility. And we've also got, the last Friday, again, kind of the last Friday of the month. We'll talk about the plan for next week in next week's newsletter. But last Friday of the month, right, psychologically, that is a big urgency factor for traders, right? If you work for a big trading firm and you've got to get your numbers padded before the end of the month, right? Next week, we got Thursday, Friday holiday. So tomorrow is a big day for risk-taking for a lot of traders who work for larger trading firms that might be trying to pad their numbers, right, as they go into the end of the month month of, I was going to say end of the month of Thanksgiving, right? End of the month of November. So that should increase volatility. And also to remember, Friday mornings are historically a little bit lower volume, and they also tend to have a little more risk on sentiment, right? At the end of the week, I know it's not just me. I'm sure you have felt this way as well. But at the end of the week, you probably haven't slept as much as you probably should have this week. I know I have been a busy week, right, in the office. And when you get towards the end of the week, right, you start to be a little bit more loose on your rules, right? Traders are more risk tolerant as we go into the end of the week. So that should increase the volatility levels as well. On top of that, we're still hearing more updates regarding vaccines. We saw a big press conference today out of the U.S. President's attorney team about the election updates, right? So these are all really big, the factors that could come in for tomorrow. Will we hear more about vaccine updates? Will we hear more about this kind of never-ending election saga right now? Those are things on our radar for tomorrow. So boy, tomorrow could be a pretty jumpy market. Tomorrow could be extra volatile as we go into OPEX, go into the end of the month, and of course go into the end of the week here. Will we hear more about vaccines? Will we hear more updates on the election? Those are some grenades that may go off right at some point tomorrow as well. And we'll be definitely keeping our eyes on the news feed. As you can see, there's not a lot of news in the schedule tomorrow. We're just a bunch of Fed speakers, right? You got Barkin, Bostic, and Kaplan talking tomorrow, all in that 9 o'clock hour. No major news because, of course, it's OPEX, right? So no major news on options expiration Friday. Don't forget on a Friday morning, now we usually trade every morning in our trade room from 8 o'clock to about 11:30 Eastern time. Got to have a really good reason to be trading tomorrow morning after 11 o'clock Eastern time, right? Remember, I always try to look at price action pretty closely after about 10:45, 10:50, and you got to have a good reason to be putting more risk on the table, as far as I'm concerned, after 11 a.m. on a Friday morning. So don't hit that snooze button tomorrow morning. Get to your desk early and get out of there early. That's when the best price action happens on a Friday, because Friday afternoons are usually a low volume gambler's environment. If you're into that thing, right? But if you run this like a business, like we do here at School of Trade, 8 o'clock to 11 o'clock Eastern time is sweet spot for tomorrow. Now, speaking of 8 o'clock Eastern time, don't forget, we open up our trade room every morning right at 8 o'clock on the dot. I would love to have you there with me, looking over my shoulder, making sure you're following the plan correctly, right, and not breaking those rules on a Friday. It's easy to lose money on Fridays, especially if you've been a pretty busy week like this week has been. Easy to lose money on a Friday if you're not staying disciplined. I'll be there to help all of our clients tomorrow follow those rules properly. I'll put a link for you guys to get registered and come out and join the trade room every morning at 8 o'clock Eastern time, Monday through Friday. We always trade together in our trade room. I'll put a link down there for you guys in the description of this YouTube video, and make sure you get registered for tomorrow morning's trading session. Boy, 8 o'clock tomorrow, we'll be here before you know it. All right, let's grab some charts here. Get that page off the screen. Let's take a look at some charts here tonight. Now, it will be it's a relatively easy plan right across the board here. The one thing you want to keep in mind is that we have really, again, across the board here right now, all of our markets are pretty much bear markets into a trading range, right? All three of these are bear markets, right, into trading ranges. There are three basic patterns I always look for when it comes to trading ranges with a bear bias. One of them is to sell above the range. The key is find a level of resistance above the range, like a trend line, a triangle line. I'll show you what I'm talking about here in a second. Find a resistance level above, wait for the pop above the range. Use the moving average now as your guide as the moving average comes over and buyers sort of buy that pullback right off the moving average. Look for those buyers to stall and fail, and we can get short back into that trading range. We call these two-try failure patterns, right? So in my trade room tomorrow and every morning, 8 o'clock Eastern time, we open up. I'm always saying, right, in a range-bound market, buy low, sell high, and focus on failures, right? Focus on failures. So failures are a big part of a range-bound market. They are basically breakout failures, because what are ranges? Ranges are magnets, right? Ranges are balanced. Now, there are two breakout patterns I like to look for. One of them is called a 1, 2, 3 breakout. You want to see a relatively strong move below the range. You want to see a very strong jump off the moving average, though. It's the 1, 2, 3 breakout. I'm going to mark a low off that low, a trend line off that low. I'm going to mark a new channel off that high, and I'm going to look at short off the high of that channel, right? We call these 1, 2, 3 breakout patterns, right? 1, 2, 3, that confirms the breakout. First pullback is always the best pullback. Now, third pattern, second breakout pattern is called a 2-try trap pattern. We look for a very strong move down. You know, because sometimes what happens is sometimes the market just takes off to the downside, right? You can't really predict it because, you know, predicting breakouts, if you're watching this video right now, you probably have already learned that lesson the hard way. Predicting breakouts don't work very well in the long run, right? They do every once in a while. Even a broken clock is right twice a day, right? So breakouts do work. They just don't work enough and as frequently as we need them to be. So in this case, if we do get that breakout, what I'll look for is one of my favorite breakout patterns: strong move down, shallow pullback, lower low in price, right? And that trap above that high, because you know what? I don't want to sell very low, right? I want to sell high. So a trap above that high. So there you go. We get the 1, 2, 3 breakout, right? You get the 2-try breakout, and you get the failure, right, above that high. All right, pause the video, grab your screenshots if you want to, and don't forget, we're going to go over these again tomorrow morning in the trade room. I give all my clients a worksheet, right, and a cheat sheet to follow along with. But this will be the basic foundation of what we're looking for right here tomorrow. So those 3 patterns are our keys. Now, as we go back to our charts here tonight, let's get into these charts. S&P, let's start there first on the E-mini, right? Here is your bear market now, right, into your trading range. Okay, now I mentioned earlier, it's a range market, bear bias. I want to find levels of resistance, right, up above, resistance, up above, and I want to get short, right? Now we talked about this last night. Big 3-legged move down last night. We're expecting to see a relatively deep pullback, and we definitely got that deep pullback. What's amazing is how they went up, and look what happened. They try once, they try twice, and back down again. This is the exact same setup, right, that we talked about in last night's newsletter. So to wait for that nice big pullback, that nice deep pullback. That's called the nested failure pattern, right? If you watch last night's newsletter, you know exactly what I'm talking about here. So bottom line is, we definitely have a bear market, right, with a trading range. Now, up until only a few moments ago, up until that point right there, right, there was a trend line coming right across these lows, right up around these higher lows here. Now we've broken below that trend line. So momentum is looking pretty good, right? Momentum is definitely turning in the right direction. That trend line though now, right, that becomes really my best friend. You know, so I want to sell short. I want to use this range as a magnet, right? The range is the magnet here now. And you'll notice what I've done. I've measured the amount of the move above the range, and I'm projecting it the amount of the move below the range. So automatically now we know where the bears are trying to go. If this was a trending market, I would call this a measured move. It's a range market. I'll call it a pendulum swing, right, as we call it in our video classes. So the pendulum swinging over, I want to get short here. I need to find some level of resistance that I can sell into right now. And you'll notice here, if I zoom in on this a little bit closer, I've drawn in what I'm kind of calling this kind of hidden channel here. And notice where these 2 lines, right? Notice where these 2 line up right now. They line up right on the sweet spot. So one thing I'd love to get here is basically a breakout pullback, right? Basically a breakout pullback. Go lower, come back up, and I'd love to get that short right off the combination of that, what was a support trend line, right, which is now a resistance trend line, right? Use it as resistance. What I really think is the sweet spot though is if we can get this trend line coming down overhead there. That would really be a very nice spot right before we make that move going lower, right? So that's definitely something I'm looking forward to here in the short term. Now, what if we end up back into the trading range here? If we end up back inside the range now it's basically the same idea, right? We've got a bear market into a range. There's a chance. It's not likely, but it's been kind of a weird week this week overall, right? The election hangover is still lingering out there. You can definitely tell. Combine that, of course, right, with this ongoing, this nagging pandemic that won't go, this virus that won't go away. The bottom line, though, is if it does sit inside this range, again, it's not likely, but if it does sit inside this range, you now know exactly which patterns to look for, right? You've got this trend line now. That's going to be an area of resistance. I would also mark up that area as resistance. And now we want to go up, right? Get those buyers to come in. Buyer, right? Buyer failure. And back down we go, right? So buyer failure pattern and back down we go. Now again, if the market goes sideways here for a while, let's back it up here real quick. If it goes sideways for a while, then it cooks lower. How do we trade it? Two try breakout, strong move down, shallow pullback, right? Lower low, trap high. That would be a very wise setup because, of course, you're worried about selling into those lows, right? You're worried about selling low. Two try breakout, very nice setup as we go. And if we can get it in time, right? If we can get a 1, 2, 3 breakdown, get that pullback, I would definitely be open to that. But we have to get it before we get too low. Right, that'll be the big concern as we go lower here. Right, they may make our job really easy and just blow right through that low. Right, if they do that, then we can obviously use that channel and get short off that channel. The pendulum swing is a guide. Right, the pendulum swing is not some brick wall. Right, some concrete wall can stop this thing. Right, so if it really goes 1, 2 and then rolls lower here, you better believe, I don't care where we are. Right, I'll be looking for that short off the high of that channel. So now we can know, right, if this market rolls over, what the plan will be on that. And let's be honest too, right? If we pull back on this, again, I call these two-legged pullbacks, right, where they kind of go back up and go. If we come off that trend line and we roll lower, you better believe it. I'm going to look for that new channel here, find that new channel, and I'll be looking to get short, right, off the high of that channel, right? So if we see this thing hold and go, right, if it really pushes, right, and runs lower, that momentum is going to swing, right? That momentum will swing down to that pendulum swing. You definitely want to be looking for that new channel, right? Find that hidden channel, and the first test is always the best test. This could really get good, right, as it starts to roll over for us, depending on kind of what we get in the short term. Now, how do we buy this market right now? Right, we got a good plan of attack for selling this thing. How do we buy this market here? Getting long on this right now requires a complete change in direction. Honestly, the buyers had a chance there for a while. The buyers, if they would have held this and ran this thing higher, they could have easily grabbed that high, right, grabbed that low, and got in off the low of that new channel. That would have been easy. That would have been easy pickings. But again, you can see how the market finished. Right, and I love the fact that they used a nested, just like we talked about, right, in last night's newsletter. Perfect spot for it, perfect trap for it, right, to avoid that trend line. Just a gorgeous setup there to finish off the session today. So how do we buy this market? We have to get the up until about 5 minutes ago, before the market's closed, we've got to get this thing to push back higher again. What that means is I've got to get a market going higher first. I have to get this pullback, right, to the moving average, and we've got to jump off the moving average, right? I've got to get that 1, 2, 3 move. Usually what it will be is it'll pop up, it'll hold the pullback, and it will jump off the moving average. Now remember, what you can see a good example right here, right? That was a very strong move up. That they held the pullback, but did they jump? No, they did not. That's a very good example of why I always tell my clients, do not let a strong jump above the high of a bear range, right? This is not a bull range. This is a bear range. If it was a bull range, I'd be more interested in getting aggressive up there. It's a bear range. So they run it right up, right? The buyers do a great job holding, but they stall, and they stall. And that's exactly why we wait for strong move up is great, right? What I really want to see, though, is you got to hold that pullback and go. If we can hold that pullback and go, now I can mark up that high, I can mark up that low, and I can be a buyer. Again, first test, right, is the best test on the lows of those new 1, 2, 3 breakouts into hidden channel pullbacks. This is exactly why I don't buy that first pullback. I always wait for that second pullback because, again, it doesn't matter how strong the pop is. Can they hold it? right? The range acts as a magnet here. All right, guys. And don't forget, all these patterns I'm talking about tonight, I know I'm covering a lot right now, like a fire hose of information here for you guys. To make it easier, our free trading class here at School of Trade, I'll put a little pop-up here in the upper right-hand corner for you. Grab the free course, learn more about my 4 favorite setups, my 3-step strategy. As part of that free course, you'll see hundreds of examples of how we apply failures and traps and reversals to our favorite futures markets every day in our trade room. So grab that link in the upper right-hand corner there. Pause the video. I'll be here when you come back. Whatever you do, make sure you get registered, right, for that free trading class. And don't forget all the important links tonight. I'll put them all in the description of this YouTube video. All right, sound like a deal? All right, looking good, guys. Now, buyers, real quick here. If the buyers do take this, if the buyers do get their fingers on this tomorrow, where do you think they're going? They're going back to that range, right? Remember, 3610 is the objective for those buyers. The objective for the sellers, we know right now, is that 35.32. If they keep it going, though, look for 35.06 half. 35.06 half is that major bottom, right, from earlier on in the month of Thanksgiving, right? In the month of November, as I was going to say earlier. So those are our objectives for tomorrow. Plan looks good here for the S&P. Shall we on oil? All right, let's dance here. Let's keep going here with the oil. What's the big takeaway on oil right now? You're going to see, right, similar situation. We have a bear market down. We have our trading range. I've measured the amount of the move below the range to create resistance overhead. I can also do the same thing. I can measure this amount, right, to find my target going below here as well. What oil has really done well here is it shows you the power of these expanding triangles. Right, these expanding triangles act like magnets, and they act as you can see, support and resistance. So we can definitely start seeing, right, where those expanding triangles are going to put us here for tomorrow. Remember, what is a range? A range is a balanced market. What does that mean? That means the middle of that range is the magnet. I want to find levels of resistance overhead to get short. I want to find levels of support below to get long. And what do? We focus on failures, right? We focus on failures. We let the mark go up and we sell into buyer failures, let the mark go down, and we buy into seller failures, right? So plan is pretty straightforward here, right, on this crude oil. Bearish into a range, but what do you see? What's our problem right now? Yeah, our problem is, there's 2 problems actually. Now, the S&P didn't have this problem anymore because of that big late day, right, collapse. The oil hasn't been able to get away from that yet. There's 2 problems right now. One of them is this trend line, right, that I assume everybody sees. I would assume whether you're on a tick chart, a time chart, I'm sure everybody sees this trend line right now, which means it's probably going to be a pretty important trend line for us to see as well. We also can see another problem, which is momentum. Right? Now, we call this rotation off the low. Okay, so this is where you've got to be careful, right? So, for example, if I look at a range, if I can just take up 2 seconds of your time here, there's a big difference between selling like this, right, and selling like this. Can we all see that? Right? They are, in theory, the same thing. It's a bear market into a trading range. What's the difference, though? The difference is all of the momentum coming off of that low, right? We have a word for this. It's called rotation off the low. Basically, what it means is the market is gearing up, right? It's still a bear market, but momentum is very strong. And so when that happens, what happens? Buyers, they put up a fight, right? Buyers fight that. You're not going to get much of a fight from those buyers in the example on the left-hand side, right? That's pretty straightforward, bearish. On this example on the right-hand side, the buyers are going to put up a fight, right? So we got to be careful with this. We can't get too aggressive getting short on this, right? Again, you know, and this would be a good example of where you can't take everything too literally. Everything in trading almost always has a little bit of a gray area, right? A little bit of nuance. And that's one of the nuances we can see right now, right? We are rotating off the high. And you can see that big strong, right? That big strong blast higher as well. So we definitely know the buyers have momentum. We also know that the trend line is acting as support. So if I was to try to simply wait for a buyer failure, right? Which of course is the best setup for a range-bound day with a bear bias on it. My problem right now is my reward is blocked, right? My line of vision is blocked. That's the big challenge, right? That trend line is standing right in my way. So in these situations, you got to be thinking about what we call nested failure patterns. We talked about this in quite a bit of detail last night on the newsletter, but we look for a nested there's two components. One, to solve the momentum problem, I'm going to use a nested entry pattern. To solve the trend line problem, I'm going to use a trap, right? So break this down into two pieces, right? What are the two concerns I have? We already know the plan, right? The plan is, again, I mentioned earlier, the plan is we want to sell above, right? We want to sell this thing back down to that low, and hopefully, right? Hopefully all the way down to the low of that triangle, right? That will be the goal for those bears tomorrow. At the very least, back to that 41.25, right? Triangle would be ideal. So that's the plan. The plan is pretty straightforward, right? Our problem, though, is momentum. When I have a problem with momentum, what do we like to do? We like to wait for the buyers to put up the fight, right? Let them put the fight up. Let them do it, right? Let them have a fit here, and try to churn this thing higher here. Let them try twice, and then we can sell short. Okay. Remember, that doesn't solve the entire problem, though. The second part of the problem is the trend line. Now, how do we avoid, basically, how do we avoid selling low? Because that's what this really is, right? If I sell into this, the term I would use is you're selling too low. You're selling too close to support. All right? It's a relative term, right? It doesn't mean I'm selling low in the chart. I'm selling too low compared to that trend line. So how do I get short, right? How do I avoid selling low? A trap, right? I need some sort of trap. So now put them all together. Right? Put them all together, right? Little day trader sandwich, right? Slap them together. I want to see a nested failure, and I want to see a trap. That's how you work around these problems. Now, I wish I could say it took me one day to figure all this stuff out, right? It took me a long time to learn this, right? But now you're getting the benefit, right? Standing on my shoulders, if you will. Almost 15 years of doing this in our trade room every morning at 8 o'clock Eastern time. So we call those nested failures. But in this specific situation, because that trend line, traps, baby, right? Traps, baby. That's what you want to look for when it comes to a rising, right, support trend line. Now, we can make our job a whole lot easier here if they go back into this range and go sideways for a while, right? So just on the S&P, right? There's a chance here they may just go right back into the range and go sideways. If I can dilute, right? If I can dilute this trend line, if you will, you know what I mean? If I can kind of erase that trend line and go sideways now, and then I pop up. Now here, what problem have we resolved? We've resolved the trend line problem, but we still have what? We still have a momentum problem, don't we? Because we haven't turned yet for the bears, right? We're still looking at this as an overall rotation off the low. So now is when I could take out the regular nested, right? Buyers try once, buyers try twice. I don't need that trap. It wouldn't hurt, right? It wouldn't hurt. I won't need the trap. Again, the assumption is we go sideways here, all right? And don't forget, too, if we go sideways and the market turns sideways, I can also go 1, 2, 3, break down, mark the low, mark the high. First test is the best test. I can also go strong move down, shallow pullback, lower low, right? 2 try breakout trap. We talked about these 3 patterns, right, at the beginning. So I can still do that tomorrow if it sits there and goes sideways. Okay, so that makes one problem go away, but we solve the deal with the momentum problem here. All right, so now we're good to go there. That's the easy, right? Again, that'll make our job easier. The easiest part of this would be if this sucker just rolls over like the S&P did and runs lower. If we can hold that pullback now, right, jump off that moving average, what does that do? That completely changes the ball game. Right? Now momentum is in. Now FOMO kicks in, right? Now greed kicks in. Nobody wants to miss that short back to 41, back to 40, right? Or in this case, back to that trend line, marking up that low, marking up that high, right? First test is the best test. Remember, when you get a strong enough 1, 2, 3 reversal like that, or 1, 2, 3 breakout, whatever you want to call it, when momentum is that strong, there'll be so many people that want to jump in on that. It becomes a very, very reliable entry off the high of that channel. And let's just say, for example, the market really rolls over and runs. And we're still waiting. If it really overextends, you want to start looking for those traps, right? Those 2-try traps. And this is where a little bit of experience comes in, and we'll talk more about this tomorrow morning in the trade room as far as how far is too far. I've got a couple cheat sheets I'll give you guys tomorrow morning in our trade room. But if it does roll over and doesn't pull back quickly, start thinking about traps, because what? Because you don't want to sell low. And as we go into those lows, that's where traps, right, become an issue. So those are some ideas here for tomorrow, right? What if we go up? What if we go down, right? And of course, what if we go sideways? Now, how do I buy this market right now? Is it buyable? It definitely is buyable, but the problem is this: we really haven't broken free of this triangle yet. So a couple options I would look for is if the buyers hold this and jump, right? We know that is a 1, 2, 3 breakout pattern. I can mark up the high. I can mark up that low, right? First test is the best test. They're going to be hunting for that 42.68 up there. 42.68 is that big top, right, from earlier this week, from yesterday. And the next one up there from there is 43.33. 43.33 seems a bit unrealistic for tomorrow, but who knows? We live in a crazy world right now, right, where anything can happen, right? Anything can happen here. So who knows what happens here? There might be a new vaccine announcement, right, that has 100% effectiveness, right, and lasts forever, right? And that might be what sets this thing off here. So we'll keep an eye on that. We may also see something like this, where we use that trend line, right? We come off that. Let's make this trend line a little bit different color here, just like that, right? We pull back to that trend line now. Now, could I buy off this trend line? Boy, you can, but man, oh man, it's going to be difficult because you're right inside that range. You know what I mean? You could look for one of these. You could go like this one, right? They try once, they try twice, and buy back up. But you can see what happened, right? It got dragged back lower. Remember, ranges, unless you've got a lot of momentum, ranges are where good trades go to die. So instead of trying to force it, right, much better idea here. Off that low, get one of these guys, right? One of those 1, 2, 3 jumps. Mark that high, mark that low, right, and up from there again. And I know I'm playing it conservative on that, but remember, this is oil we're talking about. We are swimming in oil supply right now, right? There's no demand because of the lockdowns. And the lockdowns are just starting over again, right, as from what it sounds like. So be very careful with forcing this market going higher here. Again, I would be tempted to try to go, 1 try for the bears, 2 try for the bears. That is a very tempting long. But again, it just, when you're that close to the range like that, again, you can see an example right here, right? That, again, ranges will drag, they will drag you down. They really will. So I'm going to stay away from that one, but I will be looking for, if they do 1, 2, 3, if we can get some momentum going higher, I don't really care what direction I trade in. I just want to make sure I go with the plan. Right? Plan your trades and trade your plan, especially as we go into a Friday, right? You really, most people, you cannot trust your emotions on a Friday. Really never. But Friday mornings, we're all jazzed up for the weekend, right? And here we go back down into that trading range. So we'll see, right? We'll see. Maybe they pop up here. If they were to pop up, how would you trade it? It'd be 1, you got it, right? 1, 2, trap and go. So plan doesn't change very much, right, as we go. Again, hopefully they roll this sucker right over and it becomes pretty easy for us here, right, to get that short going. All right, oil. We got you on our radar for tomorrow. Let's keep this party going here. S&P falling apart on us. I guess we know the plan on the S&P already, don't we? How about some gold? All right, gold. Let me finish my sentence here before you drop like a rock here for me. One of the inherent challenges of doing this video newsletter and trying to talk about what's happening here when it opens up in Asia. All right, what do we know about gold right now? Gold is, and I'm going to sound like a broken record right now, right? Gold, of course, is a bear market into surprise. It's a range, right? Surprise. It's a range, and so with this trading range, right, we're drawing up our levels of resistance, drawing up our levels of support. I've got my trend line, as you can see here, overhead or underneath, and I've got my pendulum swing, right, as we go. It is a bear market into a trading range. I've got my trend line acting as support. I want to use the range, right, use the range as a magnet. I want to buy low at support levels. I want to sell high at resistance, and we want to focus on those failure patterns. All right, now, what's the plan here for the gold? Well, you can see right away here, gold's kind of making our job a little bit easier here, or at least on me it is. Now, first of all, it looks like we're looking to go back down into that trading range, right? If we sit inside the range, the plan is pretty straightforward. That trend line becomes a great level of resistance, right? This top becomes a great level of resistance. And all we gotta do now is wait for that pop, wait for those buyers to come over, let them get long, and we can sell short right into those stop losses. A buyer failure pattern off the, what I'd love to do is off the underbelly, right, of that trend line. Right? Now, if for some reason, let's say for example, some reason here, they pop right back higher again, how would I sell this one? Traps, right? Because what's the problem? Same problem we have on oil. We're bullish, right? Remember, we're rotating off the low, right? Say it again, rotating off the low. So if we do pop higher and we complete that pendulum swing, can I still sell this? You definitely can. Wait for those buyers, try twice. Find that trap above that high. Why trap? Because of the trend line. Why 2 tries? Because of the MOMO, right? The momentum as we go. Again, the easier one would be if we go sideways here, get up, buyer failure, back down, or let's just hit them, right? Let's take this thing lower, run this 1, 2, 3 reversal, 1, 2, 3 breakdown, mark that low, mark that high, right? First test is the best test. And again, remember, as you get closer down to these lows down here, this is really major support. 1848 is a major low on this gold chart. So what I would definitely looking forward to here tomorrow, if the market does go 1, 2, 3 runs down, watch that trap, right? Watch that shallow pullback, that lower low. This is a great example of where a trap would really be a great idea, just because of where we are, right? Where we are here. Mark up that low, mark up that high. And see what I'm doing here? You can combine both those, right? Both those patterns. That 2-try trap, right? Or that 2-try breakout with the trap on it, right? And that hidden channel. And like I said earlier, if it really gets, right? If it really gets crazy and really runs, okay, remember, all of that momentum, there's a good chance here. What I'll usually do in these situations is when it really rolls over and runs like that, I'll go up bigger level here, find a higher, right, a wider channel, and look for the entry off of that one, just because that will give me that deeper pullback. Remember, if we get enough momentum running, it's not going to matter where it is, right? It's not going to matter where this sucker is. There'll be a lot of people waiting to get in, right, on that first pullback. So we're definitely watching to see, does it roll over, right, into a 1, 2, 3 reversal or a 1, 2, 3 breakout, or do we go sideways inside this range, or do we start to pop, right? Because you can see right now this trend line may not hold, right? We may end up poking our heads up 1, 2, right, and then back down, trap we go. Or how would you buy this thing, right? How would you buy it? Now, if we end up all the way back down here, what's my concern now? My concern is momentum, right? That's the big concern. To be a buyer, what's the best failure pattern? We should know this by now. We've talked about this all week. What's the best failure pattern to use when I'm worried about momentum? Nesteds, right? So try once, go lower, try twice. Now remember, I like to draw trend lines here, right? You can buy off that trend line. Buying the stops up here. Bottom line, though, is 1 try, 2 try. Nice, strong signal. We're going back up, baby. Right? Usually we will. Now, remember, we don't want to force it. Remember, because all that momentum. But 1 try, 2 try. Back up, we go from there. I would definitely want to see us take out these lows before I start looking to be a buyer. And a lot of times what will happen is, just to kind of give you a little more, since we've got some time here real quickly, right? If the market really tumbles down to that low, what I'll always do is I'll wait for that retest. That kind of solves that problem. Then look for the 1, the 2, and go from there, right? Rather than simply trying to just step in front of it, 1, 2, and back up. That will work. When you do it that way, though, you really got to make sure these are two very separate, right? You don't want to be, you don't want to be down here and go 1, 2, and then try to buy back up. You're walking into a freight train to run you out. What will be the easiest is if it was to collapse all the way down like that, right? You would then look at that moving average. So, okay, you're probably going to retest, right? Get that out of your system. Now, 1, 2, trend line, 1 try, 2 try, stops, right? And we're buying into stop losses. And again, don't forget, all of these patterns, the failures, the reversals, the breakouts, they're all covered, again, in that free trading class. I cover a lot more, to be honest with you, in those free trading videos. So grab that free course. The link's in the upper right-hand corner. And of course, I'll put all the links in the description of this YouTube video. Last but not least here, want to buy going higher here? I'll tell you, this could get pretty good for the buyers. They've already got a pretty strong jump up. If they can get another strong run higher on some strength there, no problem there. Find the new channel, right? We're buying off that channel. Where's our target going to be? Where's our target if the buyers take control here? All the way back up to 1883. Now, again, remember, it's got to be a real strong jump here, right? So it might go up, pull back, and then go. Fine by me. Again, you just want to make sure you have those 1, 2, 3 moves, right? 1, 2, 3, right? And hit it off that, right? Off the first test is the best test. All right, guys, I'm sure I missed a little bit tonight. I'm sure I missed something here and there. So make sure you come out and join me tomorrow morning in our trade room every morning, Monday through Friday. I'm looking forward to a fantastic OPEX trading session for you. Don't forget, getting registered for every session's trade room is always very easy. I'll put a link for you guys to get registered in the description of this YouTube video. I'll put a big button for you guys on the blog tonight. So grab that big button below us or grab the link in the description. Get registered as a brand new member and don't miss tomorrow's Finally Friday trading session. If you have any questions tonight, I'm always here to help. So call that toll-free phone number. Don't let my ugly mug scare you away. We got live support on the left. We got live support on the right. You can find live support chat anywhere you want. So reach out and ask for more information. And hopefully by now you've hit a thumbs up button for me tonight on the video. Hopefully you subscribed to our YouTube channel and hope you learned something. I hope you'll share this video with other trader friends of yours and make sure you come back and trade with us tomorrow. And of course, we'll get back on the horse again with our nightly newsletter next week. Don't forget, next week will be a short week because of the Thanksgiving Thursday and Friday holiday. So time is ticking on the month of Thanksgiving, the month of November. I'm done with my jokes tonight, though. Have a great rest of your evening out there. My name is Joseph, as always. Be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.